All right, so you hear China and investing these days, and you probably jump right to tech stocks. I mean, it's the obvious move, especially with this recent interest rate cut. But what if I told you there's a whole world of opportunity beyond that initial, like, Alibaba and Baidu kind of buzz?
Mm, I like where your head's at.
We're talking those ripple effects, unexpected winners when a giant like China makes a
Yeah.
move.
Yeah.
So today we're diving deep into some of those under-the-radar opportunities, the ones that could really shake things up in your portfolio. Ready to uncover some hidden gems?
Let's do it. I love it. Because this is what's so interesting. This isn't just about a tech boom. It's way bigger.
Right.
China's rate cut is like dropping a stone in a pond. The ripples, they go way beyond that first splash. We're talking about a country that needs massive amounts of raw materials to fuel its growth. Oil, steel to copper, everything. The demand is enormous.
Okay, so everyone else is chasing those tech gains, but we're thinking bigger picture here. Who benefits from this kind of surge in demand for raw materials? Well, one name that comes to mind is Vale.
Vale, yeah.
The Brazilian mining giant, they're practically sitting on a gold mine when it comes to steel and iron ore and their connection to China. It's just gotten a whole lot stronger.
Absolutely. You got to factor in the new political landscape in Brazil. This new administration is much more about strengthening ties with China, and for Vale, that's huge. Imagine having a direct line to the biggest customer out there. That's the kind of advantage we're talking about, and it's not going unnoticed.
No, it's not. Analysts are practically drooling over Vale's potential right now. We're seeing projections of a possible 38.5% upside, bringing it back to its yearly high. And here's a little insider tip for you. Short interest is declining. So those investors betting against Vale, yeah, they're starting to lose faith. Usually means one thing, growing confidence in the stock.
And don't forget those dividends. Vale is
Ooh.
offering almost 10%, which blows inflation out of the water. It's like getting paid to hold on to a stock with that kind of growth potential. And if you're still not convinced, consider this. Vanex Associates, a major investment firm, just increased their stake in Vale by a massive 110.9%. They're putting their money where their mouth is. It speaks volumes.
Talk about a vote of confidence, right? But let's shift gears geographically here. Let's head down under to Australia, home of BHP Group, another major player in this whole raw materials game, supplying China with everything from copper and coal to iron ore. Basically, if China needs it to build something, BHP probably has it.
And this is where BHP's geographical advantage is really key. They're practically next-door neighbors with China. Now think about what that means. Shorter shipping routes, faster delivery times. That's not just about convenience. It translates to big cost savings for BHP, and that gives them a real edge in a competitive market.
Less time on the water, lower fuel costs. That's good for BHP and their investors.
Exactly.
And Wall Street is definitely taking notice. Citigroup slapped an outperform rating on them. Argus went even further with a strong buy. But here's what really stood out to me. Bank of Montreal significantly increased their BHP holdings. That's institutional investors showing serious confidence.
It's like everyone wants a piece of the pie before it's gone. But BHP isn't just about riding the wave. They're also dishing out a very respectable 4.7% dividend yield.
So you've got potential for growth plus steady income stream. That's what I call a tempting combination. But hold on to your hats, folks, because here's where our deep dive takes an unexpected turn. Ready for a curveball.
You know, I love a good curveball. Sometimes the most exciting opportunities are the ones hiding in plain sight. And trust me, this next one is a doozy.
All right, pop quiz. What U.S. energy giant could benefit from China's economic growth? Take a guess. I bet you wouldn't land on this one. We're talking about Exxon Mobil.
I know, right?
It seems counterintuitive.
First, yeah.
But here's the thing. China is one of Exxon Mobil's biggest customers. They need energy, and Exxon Mobil is ready to supply it. And this is where those dominoes really start falling. Both the U.S. and China are cutting interest rates, which could lead to a huge surge in global oil demand.
It's true. And it's not just a hunch either. Analysts are projecting a potential 27.2% upside for Exxon Mobil. Plus, Legal & General Group, another huge institutional investor, just significantly increased their stake in Exxon Mobil. They see the potential even with the whole world shifting towards renewables.
It's like finding a $20 bill in your back pocket. A nice little surprise. But let's dig a little deeper here. What's really driving this potential for growth with ExxonMobil?
Well, their projected earnings per share, EPS, that's outpacing a lot of companies in the S&P 500. EPS is a big deal because it basically tells you how much profit a company makes for every share of its stock.
Right.
Higher EPS usually means a more valuable company, which is what investors love. And Exxon Mobil is in a great spot to really deliver some impressive EPS growth over the next few years.
Okay, so we're talking about a potentially undervalued company with good earnings and in a prime position to benefit from increased global oil demand. But we always have to ask, what are the risks?
Of course, every investment has risks. With ExxonMobil, you always have the possibility of oil prices going up and down, geopolitical instability affecting production, and of course, the whole world is moving towards renewable energy.
Hmm.
It's not a sure thing, but it's a calculated risk on a company that could do really well in a crazy market.
So it's kind of like sailing a ship in rough waters. You got to be aware of the currents, the storms, and chart a course that gets you where you need to go safely. But that's what makes investing exciting, right?
Exactly. And that's why it's so important to stay informed, to understand what's going on, and to think outside the box. Just like we're doing here. We're not just giving you a hot stock tip and saying go all in.
Right.
We're giving you the tools to analyze the situation, to see the risks and rewards, and make smart decisions that work for you and your goals.
Exactly. It's about giving you, the listener, the power to be a more confident and smarter investor. So, as we wrap up our deep dive into these unexpected opportunities, let's take a step back and look at the big picture. What have we learned here? It really all comes down to those ripple effects, doesn't it? We started with China. Cutting interest rates seems simple enough, but look at the chain reaction it set off.
Right.
Brazilian mining companies, Australian suppliers, even a U.S. energy giant, all caught up in the middle of it. It's a global game we're playing here, and you
Yeah,
got to understand the connections to really make it as an investor.
absolutely. It's like a giant game of strategy, and today we gave you a little peek at some of those moves nobody sees coming. We challenged this whole idea that investing in China is all about tech stocks.
Yeah.
Instead, we went exploring those sectors. Everybody kind of overlooks the ones that are ready to boom because of China's growth, not in spite of it.
Because the best opportunities are sometimes the ones hiding right out in the open, right? We just got to know what to look for and how to put the pieces together.
That's it. So remember, when you're out there on your own investment journey, don't just stop at the headlines. Don't just follow the trends everybody else is chasing. Dig a little deeper. Ask yourself, okay, what happens next? What happens after that? You might be amazed at the opportunities you find.
And hey, you might just discover the next Vale or BHP or Exxon Mobil just waiting to be found, right? But here's the most important thing to remember, whether you're a Wall Street wizard or just starting out. Stay curious, stay in the know, and never underestimate the power of a good deep dive. Until next time, happy investing.